What's up everybody? Tom here with another video. And in today's video, we're talking about all of this increased volatility that we're seeing in the stock markets, commodities markets, and crypto markets across the world. The Bank of England just came out and raised rates for the first time since the pandemic. And this is a surprise move. It certainly shocked markets across the world and caused some instability for the session. We've also got quadruple witching, and that's another big one of these volatile events. So there's a lot to talk about in today's video. Stay tuned, guys. This one is going to be good. See you soon. All right, everybody. Well, welcome back. And this is our market recap for the markets close 16th of December, 2021 in our market recap daily show. Now, we had some big moves across the board. And of course, this was led by big tech stocks. Raise of rates in the Bank of England in the UK, that caused some concern because all of a sudden, as we mentioned, the 2022 interest rate hikes that the Fed was saying might come true. Maybe there is 3 rate hikes there, the market is saying. On top of that, we also had the Bank of England and the European Central Bank talking about really bringing back the taper here in terms of the stimulus into the economies. And it really led to every one of these tech stocks pretty much dropping. All the massive FANG stocks, all the semiconductors were down, but it was a tale of two markets. Look at this. If we cut the market out here, you would have been not mistaken to think that it was actually a green day across the board. So on top of all of this news, we also had quadruple witching event, and that's when all of the options expire. We have 4 options markets expiring on one day. That is the 3rd Friday of every quarter, March, June, September, and December. And why do we care? Because it increases volatility, and that's certainly what's happening right now. Now, I've argued quite a few times that the Thursday, the day before the volatility event of quadruple witching, tends to be, in the last year anyway, the more volatile event. And we definitely had our blinkers on yesterday with the resistance. I know a lot of you were mentioning it in our live stream that you were lucky, or that you were looking at it from the market being a respective resistance because you expected this volatility and you expected potential pullbacks to happen. But I did not expect the Nasdaq to go down as much as it did. It's just that surprise Bank of England move that really rattled these markets, and now they have to adjust to the next what is going to happen with the Fed. I told you 2022 is all going to be about interest rates and monetary policy decision making. Semiconductors were down the most on the day, 4.35%. Technology 2.83%. Consumer discretionary remained one of the weaker ones, and that's because it's going into that seasonal weakness, 2.21% down. And actually gold was the #1 winner, 5% up on the sector there for the day. XLF also 1.26% up. The banks don't mind interest rate hikes, and that's because, of course, it means they can make more profits. Now, Dow Jones, because there's banks, because there's a lot of these more defensive style component stocks in there, it actually was barely down. It was flat for the whole day. The Nasdaq was down 2.61, and the Russell, the smaller caps, hit massive support again, down 2%. And we are starting to get to some scary zones here for things like the Russell, for possibly even the Nasdaq moving forward. If these start to break some of these key levels coming into December, while it's not looking like it's going to be a great Christmas rally after Santa comes, hopefully. And then we're also looking at some weakness in January as well that could be caused from that. So just remember, why did all of this happen? Well, it's because the Bank of England went from a 0.1 rate to a 0.25 rate. I think it's more about the fact that they surprised the market to a degree here. And then they also made it a little bit more clear that clearly central banks are all in cahoots with each other to deal with this inflation problem. And if that is true, and if inflation continues to be a big story in 2022 as well, the rate hikes may be actually coming, and that's going to be something that scares the market. So we're going to do something a little bit different today, and I just want to discuss something about Apple, because Apple was one of the largest moving stocks on the market for the Wednesday, Thursday sessions. And when we think about it, why is that? A lot of it's got to do with valuations. When you're starting to think about whether Apple is fairly valued or not fairly valued, a lot of it does come down to fundamentals over the longer term. And you'll notice that Apple actually stayed in a range of the PE ratio for quite some time, and during 2020 broke out and went to a ballistic price. Now you might be saying, well, so what about that ballistic price? We're also seeing incredible growth. And that's true. We're seeing incredible growth in terms of EPS here for this stock. But if we have a look over on the left-hand side, we hit a very key PE ratio that we also hit during those 2000s, those 2006, 2007. And this is why Apple underperformed, in my opinion anyway, for a lot of 2021. It was just clearly overvalued. Then we dropped back down and we became a little bit more reasonable, especially when you consider, look at these bars. They were growing at like a growth stock rate. I mean, this was absolutely incredible growth that we've seen so far from Apple. It's then gone back up. It's getting high above that 30 plus PE ratio again. And when you move really high on a PE ratio, and on top of that, you're moving far away from some technicals such as the daily 20 moving average, the weekly 20 moving average, you're getting a little bit too expensive. So look, we were big fans of Apple here on the channel. Don't get me wrong. I thought 165 was certainly in the bag by the end of the year, and it did that, and it did even more after that. But it is getting expensive again. I think that's one of the reasons why it's coming down. Now, a lot of people are arguing with us about the idea of, is this a double top? So here's a 4-hour 20 moving average, and you'll notice it's come off this zone very, very, very well. And this is why the market's at a pivotal point. When we look at semiconductor index, when we look at some other stocks today in the coverage, and obviously look at everything else, you'll see how pivotal the Friday session is going to be to the market's strength or weakness. So double tops basically mean we're hitting a resistance, but that resistance is being met. It's tested it once, it's tested it twice, and said, no, I don't like that price. That price is a little bit expensive. We've then closed back underneath, or we're going back down to the support. And you'll notice where the closure happens, right on the moving average, right on the support. So is this a point where you expect buyers to come in from the Friday session? The answer would be yes, you would expect buyers to come in here. But if it closes underneath, what becomes the next most likely thing for something like Apple? Well, the daily 20, certainly, but also possibly even the weekly 20, which is something we've bounced off several times here in the past. And if that happens, how much of a downtrend would this be in for Apple? This would be about 11% decline back to previous resistances and supports. That's a big deal. I mean, you're talking about the biggest stock in the market falling a considerable amount, and that's a big possibility for the bears. So it's important that the bulls try to hold this thing up. Otherwise, as you'll see very soon, many indices and many other things might actually be coming to the weakness. Not the S&P, but maybe the Nasdaq, the IWM, and a few others. So all of this volatility, it's led to the VIX being quite high. I mean, the VIX is still above 20. It went back up, went to the 20. Again, we see that expectation of the VIX going into the Thursday session before quad witching. Usually the fear index does tend to rise. I think it will decline. That's more of a guess than anything else through the Friday session, but we'll have to find out. A lot of the news is known. Does the market want to continue its weakness? Well, we'll get some signs of that a little bit later in today's video. Another one, PCC is starting to drop here. So this means that there's actually a lot of calls that are going into the market. So that FOMO, that sugar rush that happened on the Wednesday session, that's clearly really moved into a lot of retail traders buying calls. And that will be very prevalent when we take a look at our SPY bought calls a little bit later. So the PCC is going down. Now, if it goes back into like a 0.7 rating, again, this is where we get a little bit more concerned. This is usually where market crashes or market corrections can occur. When you have a lot less puts in the market in comparison to calls, that's how we use it. We use it as a contrarian indicator. And at this stage, we're just in the middle of the zone. So that's okay. Nothing wrong with that. Let's get into some commodities discussion. Then we'll go through some more stocks, and we'll get into, of course, some crypto discussion a little bit later. But I want to start off here with US oil. US oil hits our resistance again, 73, bam. But you also should be looking at UK oil as well when you're doing your analysis. Brent is very important to look at and watch and see how it's trading. So here's Brent, and you'll notice it's been much higher in the past. We also have a little bit of a downtrend here that's happening through the last couple of peaks. So Brent hasn't quite shown us the resistance breakout. US oil is looking a little bit better. It's showing us that it wants to do something, but it's all about this 73. Should 73 be broken, then we get hopefully a participation to 75, and past 75, while oil's back on the trading platter at that point, and everyone will be discussing it. Another big deal is that the daily, of course, closed above all of these rejections. The previous rejection highs, 1, 2, 3, 4, 5, that's now closed above. Still underneath the 20. I still think 73 is the key zone to be watching here, but what an important zone it'll be. And really, US oil has been relatively easy to trade. We had the resistance, we had the beautiful support that we mentioned so many times here on the channel over the last week together. And you guys got big brains out there, you have spotted this zone. And we've also mentioned this resistance. So it's been pretty good day trading here on this particular commodity. Let's check out another commodity, gold. Well, things are improving. Check out this 2 hour. We finally get above the zone. We even bounced back down to it and instantly bought off it. So do we now move towards 1810? It seems likely. Let's take a look at the closures here on the 8 hour. 8 hour has closed above. All those moving averages have been cleaned up. Daily, again, we're above all those moving averages on the daily. That's a huge deal. And it's just typical of a manipulated metal. Look what they did. Supports, supports, supports. Oh, great. FOMC event, and we managed to take out your stop losses. I kind of hold to this idea of being predictionary, like trying to predict what gold's going to do versus being reactionary to the actual market. I feel like it's really, really, really a reactionary style trade. And a lot of people get trapped in this idea of not waiting for the confirmation here. Look at this nasty candle. I mean, you can't tell me that wasn't preordained and really hectic. And it's the same thing on silver. While we think this one will go up and we're watching gold the closest, look at silver. It's another one. It goes down and it tests these lows. It takes out tons of people's stop losses, fully reverses, and now we're coming up to the exact same point that we've been talking about for a while, that 2260. So silver and gold certainly powering up here and starting to look a lot better, but they were nasty when they put in that max pain over here. And once you can start to see the markets with the idea of the traps, with the idea of being reactionary to stop hunts, to maximum pain concepts, all of this will really help your trading and help your investing knowledge. And it's a beautiful moment when you start to realize that. And I think many people that subscribe to the channel are starting to see these types of things. Tesla couldn't get past 1,000. Look at this. It goes straight up to what a high, I think the high of the range was 995, pretty much 994.98. And then it sold straight off, made a slight low here, and Tesla could be moving towards that 900. So bears are continuing to win here. Here's our overall little bit of miniature trend line down. Now, the reason we've got this is because look at this 1 hour 50, 1 hour 50, 1 hour 50. What if we went bang through the 1 hour 50? Would that be a good first sign of bullishness here for Tesla? I certainly think it would. Many day traders that got into it on the previous session obviously sold just before 1K, and they said, yep, I'm done with that one. Great day trade. Investors will be looking at the 900 and of course the longer term trend line. So this trend line that held so many times before, should Tesla fall off a cliff for whatever reason, this will be where we look for massive support. And it's important to have these lines on your chart, be ready for them, and be prepared with a plan should your favorite stocks come into these key zones. Speaking of favorite stocks, semiconductors. You could almost put on this chart right here a picture of NVDA, and it almost looks exactly the same. So we're on the 4 hour. You'll notice it's becoming very choppy here on semiconductors. Huge ramps, huge sell-offs, all sorts of madness going on here. And we've got two key zones. So you've got your resistance up the top, and of course you've got your support. Now, I always like when I see some consolidation to check out the weekly. That allows us to find out where the resistances have been and where the wicks have been and the bodies have been, and where a big closure for the session might be a worry. So we've got some wicks here, but we've never had a closure underneath this zone. So right around, let me have a look at that price, right around about that 300, just 299, 298. And we also know that we're kind of far away from the weekly 20, which has been a very big buy area for semis. So semiconductors are holding in the balance. A daily will show us here where the buys and the sells have been. If we close underneath this 50 exponential moving average on the daily, you would think the next stop for it is about 276, 275. That will push down NVIDIA as well and cause all sorts of pain in the markets. Again, why we are on a key level of support right now is exactly this type of chart really exemplifies it. And many buyers will be looking at this zone saying, look, you know what? I hope that the day trade, we see a little turnaround, little double bottom, 5, 15-minute charts, and I'm interested in picking those semis back up and taking them to 315. So a lot of opportunity here on the semiconductors, depending on what they do. It really does look like an NVIDIA chart here. It has a very similar previous resistance, which could act as support. And I think we're going to find out what's going to happen on Friday, because when Friday closes, we should have a signal either way on this one. IWM, another that has really weak kind of movement here. It just continues to fail at getting above key zones. So IWM is definitely on support. You can see the support, you can see the buying that's occurring here and the buying that's occurred in the past. The weekly, in our weekly analysis video, we'll be looking at this very closely. The weekly, again, it's starting to close a little bit too weak. I'd like to see the Friday pick this back up. 220 remains one of those key zones we need to be watching. Then the 226. For people that are scared of this market, I feel like the 226 is the better zone. You've got to just kind of let it play out, let it try to recover. And then once it gets through this zone, I think that'll be where we get that heavy participation in a market like this. So yeah, it's on support. It looks pretty nasty. If you take a look at the monthly, you can see how big a deal the rest of the trading month for December is going to be. We want to see a wick right back up here on this market. It's not for the faint-hearted. It's the bottom 2,000 stocks, the smaller ones. And it's signaling to us that if this goes bearish, maybe the market isn't healthy. Maybe the market is ready to turn around and come back down earlier than we suspected. So yeah, keep watching. IWM is going to be one that we do need to watch. QQQ, tough to analyze this chart. So this is the Nasdaq. A lot of people will want heavy analysis on this. The reality is the S&P 500 is really dictating the overall health right now because it's not just tech stocks. We've got that 383 here. We know that's previous resistance. We know it's been bought off that twice. For the session, I'm sure there'll be a lot of buyers floating around there. If you close underneath, we go back to the 379 area. But the big deal here is going to be the weekly. You know, if we get underneath that weekly 20, well, goodbye to the bulls for now. The bears will be in control of this market, and you would think they're going to try to push it down quite far. This is where we're going to see a lot of bearish action should it come through this zone. So I think this is where I go from being really optimistic to a little bit pessimistic on the short term, not the long term, just the short term. And we start to look, okay, where is going to be the next level of big support? It hasn't happened yet. We're still looking at a market that looks relatively okay when we look at the S&P 500. But yes, tough stuff here on the QQQ. Let's take a look at the SPY. Things here don't look so bad. I mean, yes, it's fallen off, but it's come straight off the tippity top, the resistance that we expected. There's a little early breach here, trapping retail into thinking that it was all good, and then it sold straight off there. And have a look at this trap. They're nasty, I tell you. We go down into the smaller time frames, you get like a little hanging man there. We go to the 15-minute, and it just goes through, and then it basically reverses a few times, instantly buys up. You get that kind of gap movement, and then bang, sells straight off this zone. And there's a little lightning bolt towards the downside, and the rest of the day was, of course, negative. You'll notice here on the 15-minute, the last two trades, the last half an hour was actually negative. Big volume came through, and there was a little bit of negativity. But what this does is it gives traders a bit of an idea of where the bulls are regaining the control in the next day of the market. This 468.32. You get above here, you get above this little resistance, and you start that ramp. Another big sign is going to be from the hour chart. We actually did get a buying hammer pressure, just no real follow through with the closure here. And where did it stop? Previous supports. So we had support, support, support. Again, follow through, hammer rally, great for the bears. All they need, get underneath this zone, and back down we go to 460. So some big areas. It's all about key zones. It's all about understanding your day trades, your particular strategy, and they're just some of the zones that I think are worthwhile watching. Straight on the open here, if it opens around that zone, how does it react to it? And a breach of either one of these sides is going to give us a lot of information about the rest of the move for that session. So that's going to be very, very big. So we mentioned quadruple witching. It's a pretty long video because there's a lot to talk about. Look how many puts are stacked all around that 460, 450. So there's huge amounts of puts expiring this quadruple witching. This is for, of course, the 17th of December expiration. There's also quite a lot of calls that have started to be entered into the market. So you technically expect the market to be between 465 and around 470, I think it is, 475 by the end of the close. Now that gives us a bit of a range. Of course, it's not that helpful, but what we do with this is we really get an understanding of the market wasn't probably going to sell off incredibly quickly this week in terms of getting underneath super zones, because there's just too much money to expire worthless here. If we know 70% of options expire worthless, why would you want to push the market down this week? There's just too much here. So it becomes one of those things where we create put walls. Also got a bit of a call wall with all of that over purchasing that's going on from the call side. We've seen that scale up since yesterday's trade. And yeah, it just shows we're stuck in this little range here for now. S&P 500, SPX, the same thing, just giving you the different price targets. Obviously, you've got the resistance here about 46.86. So we'll find out whether it can reverse that in the day of trade. Let's move over to the crypto market. So crypto is not faring so well. It's kind of just weakening here, really. I mean, we've got like a strength and the rallies just keep getting weaker and weaker. Is this a descending triangle? I hope not, because if it is, and we break where we should be breaking, which is around that 2/3, somewhere either here or here to the downside, then we're calling in at 42,000 again. But at this stage, Bitcoin still looks okay. Hopefully it rallies off this level. We move through, breach this zone, and then once we breach 52, that's the big deal. That's where a lot of bulls will re-enter the market. Huge deal, 52K for now. And as you can see here, there is weakness in this market. We need to get back above that 49.5, 50K, and then we could start to see a lot of people dumping in, probably purchasing around this area and moving it forward. And it's the same thing for Ethereum. If we check out Ethereum here, downward slope, we need that incredible aggression to come back into the markets, push us through all these moving averages, get that bull side back in board. And rather than FUD, we kind of need people to have the FOMO, and it isn't happening at this stage. BTC shorts is not what's doing it. So it's probably something else, maybe a bit of Wall Street manipulation, who knows, or just general people being scared of the market, because the shorts are not increasing, which shows us that the market is not really freaking out from this perspective. It's not the whales exiting positions. It's just, I don't think, really great sentiment across the board through the crypto markets right now. All right, guys, thank you so much for joining us. If you enjoy the videos, please give us a thumbs up and subscribe. We'll see you in the next one. Bye for now.